Hey, welcome to our weekly Forex market analysis call, and this is in preparation for trading for the week of April 16th to the 20th, 2018. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money, especially with all the volatility that we have seen in the markets recently. Just be mindful of that. Okay, so as usual, we will start off by taking a look at our Forex Factory calendar here just to see what kind of news to expect during the week. One thing that we do need to keep in mind here, and it will have an impact on the market as the markets open today, are these Syrian attacks. So US has done an airstrike on Syria here, and as a result of that, we should see an impact of that. So I would keep an eye on the news around these Syrian attacks, missile attacks. So normally what happens is when we have such geopolitical problems, usually Japanese yen tends to strengthen. So all the yen crosses usually drop. But lately, because we have had so much of this kind of geopolitical news in the market, the prices, yen is not responding the way it normally does. So first we have seen trade wars, and now we are seeing missile attacks. So it's just creating a lot of confusion in the market. But generally, when there is a geopolitical situation such as this with attacks, normally yen and Swiss franc strengthen. So crosses with those, so pound yen, dollar yen, all of those generally tend to drop. And US dollar actually generally strengthens as well because it's also considered a safe haven currency. So just keep that in mind, but be careful, like I said, because market has been discounting a lot of this information as just like, for example, with the trade wars, the comments back and forth, market has been disregarding that information. And that's why we haven't seen the yen crosses drop like we normally do. So just wanted to point that out. Okay, so in terms of the news, what do we have coming up? We have retail sales numbers for the US. Again, these are very important numbers, so we have to be careful with these. They will impact the US dollar. We also have monetary policy meeting minutes from Australia. So Reserve Bank of Australia has not been very bullish in terms of monetary policy. They have actually been taking a laid-back approach. They have been cautious about it. So with this one, if we hear any comments or any discussion around raising interest rates, or the commentary or the meeting minutes show that Reserve Bank of Australia is bullish on the economy, then it will be good for Australian dollars. Otherwise, it could have a negative impact on the Australian dollar. GDP for China, even though we don't directly trade Chinese currency, Chinese yuan, this will generally have an impact on New Zealand dollar and Australian dollar because they are big trade partners with China, and hence whatever happens in Chinese economy will have an impact on those two currencies. And then on Tuesday, we have average earnings index and unemployment numbers for British pound. These are generally important numbers to pay attention to. So they will have an impact on the British pound. So we'll have to watch out for that. The ZEW economic sentiment will be important for the Eurozone as well. And then in the New York session, we have building permits. Again, that will be important for the US dollar. We have a bunch of FOMC members speaking. So again, anytime we have a central bank, any of the central bank members speaking, their comments will normally have an impact on that currency. So just be careful with that if you're trading US dollar on Tuesday there. British pound CPI. CPI number is very important that central bankers pay attention to. This is our inflation number. And generally, central banks want to see the inflation between 2 to 3%. We are at 2.7% here. As the inflation grows, as the CPI number goes up, it puts pressure on the central banks to raise rates. So that's why this number is very important. So far, Bank of England has not raised rates. Now, as the numbers come in positive, there is more pressure on them, and we did hear last time when they spoke about potential interest rate hikes either later this year or next year. So as the numbers come on positive, if this number was higher than 2.7, British pound will certainly go up. So keep that in mind. Again, CPI numbers out of the Eurozone, this will have an impact on Euro as well. And the big thing here would be for Canada. We have Bank of Canada rate statement and monetary policy report. So Canada has been one of the countries, just like the US, that has been raising rates. Bank of Canada has done several rate hikes. However, now they have gone neutral in terms of the interest rate hikes. And if we hear so I'm not expecting an interest rate hike. It's expected to stay at that level. But what we need to watch out here in the policy report will be to see what the central bank has to say, Bank of Canada has to say about the economy overall. If they are bullish on the economy, and if they have made comments about the economy that are positive, then it will have more of a positive impact on Canadian dollar. So dollar CAD will go down because Canadian dollar will jump up, and all the Canadian dollar crosses will have an impact. So just watch out for that. On the other hand, if Canada kind of turns more like Australia, where they're cautious and they're concerned about the economy, then it will have an opposite impact. So that's kind of what we're looking for. But again, this is a major statement, and if you are trading the Canadian dollar, just be careful. Normally, we'll have first impact from the Bank of Canada rate statement and the monetary policy report when it comes out, and then usually half an hour, or in this case, hour and a bit later, we have press conference, and again, the market will react, or the prices will react again when the press conference, as the press conference proceeds, because questions will be asked in the press conference, and based on the responses, prices will react. So just be very careful with that. Going in, again, we have more FOMC members, New Zealand dollar CPI, so a lot of CPI numbers, inflation numbers coming out. Again, this will be important for New Zealand here. So depending on how the numbers come out, it will have a positive or negative impact on the New Zealand dollar. And then we have employment numbers out of Australia. Employment numbers are, again, another important indicator that we need to watch out for, because if they drop, then that will be negative. But here it looks like we're expecting higher numbers. So if the numbers match this or exceed this, it will be positive for Australian dollar. Pound retail sales, again, important numbers. So we'll have to look out for that. And then multiple FOMC members, a lot of FOMC members speaking this week. And then on Friday, we have MPC members speaking, and German Google President Weidmann speaking here as well. And then we have more CPI and co-retail sales numbers out of Canada. So again, Canadian dollar will be impacted by that. So a lot of numbers coming out of Canada here. So that's our week at a glance. So just watch out for market reaction to the Syrian attacks. And I think that will have an impact, especially on the yen crosses and Swiss franc crosses. So just bear that in mind. All right, so let's start off by taking a look at our Euro US dollar weekly chart here. So what we're seeing here in terms of the Euro, we have been range bound for some time. If we take a look at it, this is our internal range that price has been trading in for several weeks here. We're looking at a weekly chart. For several weeks here, price hasn't really done much. It's just gone sideways. And this is our larger range. So this is where the price has been moving. So that's what we'll take a look here. It is a range-bound market at the moment. So what we see here is price has been kind of maintaining this a little bit of a lower trajectory here. So we are pushing towards the bottom of the range at the moment, just going sideways here. And if we take a look at the volume, nothing much has been happening. We we have a bunch of neutral volume, which means price is not really doing much, as we can see here, just back and forth. So in this case, what can we expect? Right now, if we take a look here, price has rejected this previous resistance level here, and we are pushing, or the prices are pushing a little bit lower. So I would expect the price to stay range bound, first of all, within this range, and potentially move towards the bottom of the range into 122.20 area, into the bottom here. So looking for basically price to come back and first test 122.20 area, and then below that come and test this 121.50. So those will be the two targets to the downside. But overall, we are still in this range bound move. So just keep that in mind. We are in a range bound move, so price hasn't really gone anywhere in this. So we are still trading the range within that. So just looking for price to come down towards the bottom of the range here. So euro dollar looking slightly bearish here. Pound dollar, this is our weekly chart. So last week we had looked at this being bullish, price has moved up, and now we are coming into this resistance area. But overall, we are still in that bullishness here. As we can see from our trend line, price is still pushing higher. So pound is still bullish overall. But like I said, we are pushing into resistance here. So we do have to be careful, but the bias still stays to the upside. The important part here will be to see if the price is able to break through our resistance here. If it doesn't, then we could get a double top and price could come back into our trend line here. So that's something we have to watch out for. But once price breaks to the other side of this, so right now I'm looking for price to go and test the high. And once price breaks out, we want it to test the level again. And if it holds above, then I'm looking for price to move up higher. So my bias is bullish, but I would be cautious at 143.50 level, because if it doesn't break through, we could get a double top and we would come back into the trend line here. However, if it does break through and gives us this pullback, we can enter long here, and I'm looking for 147.60-ish area at the top here. So overall bias is bullish. First target 143.50, and if it's able to break on the other side, then we would put it at, actually let's put it at 147.20. That's where I would look for the next level to be. So bias is bullish for pound dollar. Aussie dollar here, we have had a bullish candle close. Price wasn't able to break below here. We had a bearish to neutral candle close last week. It wasn't able to break below the support. Now we have seen a big bullish engulfing candle close. One thing to note though is we are into resistance here. So we have to be careful of 78.10 level. Now bias is to the upside. So first target would be 78.10, and once price breaks through that, looking for 0.7920 level. So those will be the two targets to the upside. But again, like I said, keep in mind if you're not able to break this resistance, because this is an important support or resistance coming all the way from here and further back. So this is an important resistance area. If the price is not able to break above, we could get a double top. And then we have this trend line here as well. So price could just do this, right? Go towards the bottom. So based on the weekly bullish candle close, we'll look for a bullish move back into the resistance at 78.20. If it does not break, then I'm looking for price to come back into this little bit of a range. Or if it breaks above 78.10, then I'm looking for the next target, which is 79.20 for Aussie. So overall bias will be to the upside. New Zealand dollar here, as we can see, this has been range bound for a while here as well. Right now, we are going sideways in this range. Price came into the bottom multiple times, rejected that, moved up. Now we're moving towards the high here, high of the range. So the bias for this one is bullish, looking for price to go into 74.40 level, which is the top of this range back into resistance. So New Zealand dollar, the bias is to the upside, 74.40 would be my target, which is the top of the range here. But overall, we're bullish within the range. Dollar CAD weekly, this one we have been bearish on this one. Price has dropped for another week. I'm still bearish on this, looking for price to come into 124.60 level here. Now we do have Bank of Canada statement, which could cause problems, and it could reverse this pair. But for now, it is looking bearish based on the weekly candle close. So my target on this will be 124.60 to the downside, which is the next support and resistance level. And if it breaks that, then 122.70 to the downside. But overall, bias for dollar CAD is to the downside. All right, so let's go into pound CAD here. Pound CAD, we had this move up, and now price has been coming down. We're back into support here. Now, if the price, so we have an indecision candle, so price has not been able to break below the support. Indecision candle here. So what we could see is one of these. So price tests the level 177.80 again, holds above this, and then pushes up higher. So if pound dollar pushes higher, we could see pound CAD go up as well. Or if the Canadian dollar turns around based on Bank of Canada statement, then we could see pound CAD go up as well. So we'll have to monitor both of those pairs. But for now, what this looks like is price, it has pulled back into this previous level, and we could see price go up. So I'm looking for price to drop into 77.80, and from there push up higher and go potentially test the high at 184.20 level. However, if the price breaks through this 177.80 level, then we could get one of these moves, and we could see price go into the bottom here. So that's the second scenario. Because the candle is very, very neutral here, there is really, so it can go both ways, and we have to be mindful of that. Next one, taking a look at Euro CAD here, we have a bearish candle close. We are into support here as well, but this one could move lower. There's still room for this to drop. So Euro CAD bias will be to the downside. 153.60 will be the target here, back into the support and resistance area. So Euro CAD bias is to the downside. Pound Aussie here. Pound Aussie is going sideways. We had a bearish pin bar, but that didn't play out. It's just been going sideways. So if you look at the daily here, price is just in this range. And with this one, now we do have a very neutral candle close, which means it can go either way here as well. So although the pound crosses are pound CAD was neutral, pound Aussie is neutral. So, and we are right in the middle of the range. So the bias here would be very neutral. If the price breaks below 1.8200, then we can see a drop further down. But for now, I would just trade the range. If price comes into 1.8200, I'll be looking for a buy opportunity. If it comes into 1.8500, then I would be looking for a selling opportunity. So overall, we are neutral on this. Euro Aussie here, we have a big pin bar, big rejection here off of the support level here. So with this one, based off of this, now price can still drop and come back and test the level once again. So we could get one of these. If price does that at 157.80 level, I would be looking for a potential double bottom for price to trade up higher. But this rejection here suggests that price could move higher into 1.5960 level, back into the high here. So bias for this would be to the upside. However, we do have to be mindful that it could come back and test the bottom again and then go up higher. So I would keep an eye on that. Pound New Zealand here, based on the weekly candle close here, we are just going sideways. Nothing really has happened here. But since we do have 2 pins to the bottom here, I would be looking for a move back into 1.9640. So Pound New Zealand does look bullish here, and looking for price to go back into the top of this range. That price has been trading in for a little bit, but because we have rejected this twice, I'm looking for price to move up higher. All right, so Euro New Zealand. This one looks bearish. We have so we are sideways here and looking for price to drop into 1.6580 level here, and even slightly lower into 1.6500. So bias is to the downside, looking for it to drop further. Okay, Swiss franc, Swiss crosses here. And now with the Swiss crosses and yen crosses, whatever's going on with the geopolitical situation will have an impact on this. So just keep that in mind. But based on where we are into the resistance here. We are all the way back into 1.1880 level into here. So we are into resistance basically. However, it is a bullish candle close, and as such, it can go higher. So the next target higher would be, where are we? Let's come back all the way. So price is filling this inefficiency. So we are almost towards the end of filling this inefficient, big, huge drop that we had back in 2014. And I would be bullish on this purely based on the technicals. However, this is not just about technicals. We do have geopolitical situation that we talked about, which means that Swiss franc would generally strengthen, which means all the Swiss franc crosses could drop here. And that could fluctuate based on the market sentiment. So just keep that in mind. Based on this daily close, though, it looks bullish. So what we could have is price pulls back into this previous high and then goes up further. So my bias would be bullish based on technicals, but I would be very cautious on this one because of the market situation developing at the moment. So same thing with the pound Swiss franc, very, very bullish candle close. So looking for price to move up higher. Next target would be 138.80, and it could even go higher into a 139.80. So overall, based on the technicals, price is looking bullish. However, the Syrian attacks could change that situation. We could see market gap down because of the attack. So this could be both for Swiss franc as well as all Swiss franc crosses as well as all yen crosses. So just watch out for that. Dollar Swiss franc here, this one is looking bullish here as well. Price is into resistance here, but there is potential to move up higher. So target would be 1.9820. But again, like I said, with the Syrian situation, this could just gap down. So that would be my only caution with this one. So play by the ear, keep your eye on the news feed, check with Bloomberg and Reuters. Generally, they have the news right up front, so I would suggest doing that. Pound Swiss franc. So I'm not sure what you mean. In case it gaps down, it could gap all the way down into this 134.65, this previous support and resistance level. So just be mindful of that. Or if you were to look at the daily here, there is a level in between, a couple of levels in between. So that one is a 1.3630 will be the first level I would watch out for. And then that right there, the bottom, which is 135.50 level. So those are the two levels that it could drop down to. And so, for just from observation point of view, this will be a good exercise because when stuff happens, geopolitical stuff happens on the market, because the market is closed, generally we see gap ups and gap downs on the weekend. And this is what we could see, price drops, and then it could potentially pull back, depending on how that's why I'm saying keep an eye on the news. It could drop all the way down here, depending on how severe the market thinks the situation is. So this is purely, we are talking about market sentiment. This is what market sentiment is all about. It's not about fundamentals. It's not about technical levels. It's just how the market feels about the situation. And markets generally do not like situations like this that generally create volatility in the market and generally create fear in the market. So that's why it's important to keep track of these. So based on, moving on to our pound yen, based on the weekly candle close, this looks bullish, but just like I said, be careful with this one as well, because price could gap down for all the yen crosses as well. So that's something to keep in mind here. So we could see a drop if market sees this as it's not a good situation. So we could see gap downs on that. But based on just purely the technicals here, this looks bullish, and I will look for a further move to the upside here. 156.50 would be the target higher, but just be mindful of the of what's going on from our emotional perspective, market sentiment. All right, so this one, Euro Swiss, Euro Yen, we are into resistance here. This is where price was before, and now we are back into this resistance. So the candle close is bullish, but we are seeing some neutral volume here. And also price is back into resistance. So we could get a move like that. So I would be careful with that one. And of course, if it gaps down, then all of this could gap down, right? But from technical perspective, if let's say market pulls back and then it could go back up again, and then it could just continue on in the direction into the bias here. The bias is bullish for now. So I would just keep an eye on it. It could drop right into this daily level here, even back into the support and resistance at 131.80 level. So this is what I am looking for here. If price were to, let's say, gap down, the first target would be 161.60, and then it could come all the way down into 131.60, and then it could come all the way down into 131.00 level. So just watch out for it. But from weekly technical perspective, we are bullish, but into resistance. So that would be something to be careful about. Same thing with dollar yen here. We were trading in a range. Price did try to break higher. We are looking at the daily here. And so we have this pin bar right at the tippy top here. And with what happened, we could see this one drop here as well, or gap down, and the level would be 106. It could just drop all the way into 106. But from our weekly perspective, as we can see, price has been moving higher here. We are into resistance. If we take a look at it, we are into resistance. But again, it is getting to be condensed move. That means price is not moving as strongly as it was, but still, it's still bullish. So it could go higher into 108.00. So from weekly technical perspective, this is bullish. But from our daily perspective, like I showed you before, we were not able to break the daily range here. Price traded sideways for multiple days, did a pin, which means it could drop here in the for the immediate open. So just keep that in mind. All right, so let's do gold and oil real quick, and then we'll wrap it up. All right, so one thing to note about gold is that gold reacts to these levels as are geopolitical going-ons as well. So it's based on market sentiment. So over the last little bit, it's been trading in this range. So even if you take a look at the daily, price has been trading between 1362 or 1363 and the bottom at 1304. That's the range it's been trading at. Right now it pulled back, so it could drop. But what happens when there is geopolitical risk in the market tends to go into this risk-off scenario, which means safe haven currencies and safe haven assets go up in value. Gold is a safe haven asset, so it could go up in value if market does see the current situation as a volatile situation and we go into risk-off scenario, then gold would go up. But based on what we are seeing right here, it is still in the range, which means once price gets into the high of 1362, I will look for a drop. If it gets into the bottom of 1304, I will look for it to drop based on purely daily technicals here. We don't have an engulfing candle close, so I would look for price to go into here and then potentially a double top and drop. But like I said, I think this will be driven right now more by geopolitical situation than anything else. And this one, oil here, oil has been very bullish. It's holding above our, it has broken above the level, the high. So with this one, and that's one of the reasons Canadian dollar has been doing really well. So dollar CAD has been dropping because oil's done well and it is directly related. So Canadian dollar is directly related to oil here. So let's pull back a bit and see where we could go next for this one. So 69.50 will be the target for oil to the upside. And if it continues to go up, then dollar CAD could continue to drop as well. So bias is bullish for dollar CAD. All right, so that's all we have for today. Any questions or comments before we wrap it up? Yes, I will be doing the Turning Pro Challenge video today. So, also, if you guys want to join, I've created a Facebook group. If you guys want to join that, I would. So you can just do a search for Trading with Venus Facebook group, and I'm doing more Facebook Lives 3 days a week. I'm doing Facebook Lives and posting some charts and things like that there as well. So you're welcome to join the Facebook group for us. And I will be posting my daily level. So this is the group. It's called Facebook Groups Trading with Venus. So maybe I can drop this into the chat here if anybody's interested in checking. So the Turning Pro Challenge, I'll be doing a daily recap. So I'll post my charts, my statements and charts, so you can check them out there in the Trading with Venus group. So the link is in the chat if you guys want to join. But I'll be doing a lot more there. So these are the levels for gold. We're still in this range, and it'll really depend on how the market perceives. I think this one will be, if yen's crosses drop, gold will likely go up and we'll be testing the high in that situation. All right, so we'll call it a wrap for now. You guys have a wonderful weekend, and I will see you again next time. Bye for now. You're welcome.